I welcome you all to the web series 8 of Yashaswini and Idol. This series is conducted by the Women Member Excellence Committee. We are here fortunate that we are having our Vice Chairperson CA Kemisha Soni with us. I invite Kemisha ma'am to give us a welcome address.
Yeah. Yeah, thank you.
Yes, ma'am.
I would like to welcome you all who have already joined this webinar, Yasashwini and Idol 8. This is the eighth webinar. And address is where the topic is, I would say that very good, SQC and audit quality and impact of GST reconciliation and precautions. That is, I would say that very practical also and day-to-day use also. And here about that our WMEC and from our WMEC we have also compiled certain publication also. Specifically I would mention here professional opportunity for chartered accountant and women independent director related publication. Some publication our women member can refer because specifically we have designed for our women chartered accountant only. And through this excellent series, we are taking topics which are relevant in not only in practicing area but also for industry people also, and specifically for women chartered accountant. And as today's topic related to auditing standard, because we are certifying so many documents, so people are still not aware about that the institute has already given certain formats, certain checklists related to auditing standard and related to SQC also. And I would say that you may download all type of checklist formats related to audit, and specifically for certification, I would say that please refer format related to certification, whatever has been published by our double ASB, that guidance note on our various kind of certificates. And about second topic related to reconciliation and precaution related to impact of GST. For that also, I would say that in any case of even audit and in taxation, this subjects is very relevant. And this kind of working is also most important. And in our indirect tax committee, one publication is also there for this GST reconciliation. So maybe member may refer that publication also. And we are taking so many new initiative under the able leadership of CA Preeti Savla madam, who is chairperson of this committee also. And she is doing so many she is working on new initiative. So definitely she is also with us. And once again, I welcome you all in this series of Yashaswini and Idol 8.
Welcome, Preeti ma'am. Now we are having our chairperson CA Preeti Savla ma'am with us. I invite CA Preeti ma'am to give us a welcome address.
Thank you, Prachi, and welcome all of you. So, friends, this is our endeavor to serve all of you the best. And today we are together, me as well as Kemisha Madam, our senior council member, and welcome all of you. And this being the audit season, we also thought, okay, let us have this audit sessions. And accordingly, we have invited Padma Shri and both our speakers. So again, friends, it is our endeavor to serve the best. And as I said earlier also, again, reminding all of you to keep your 28th and 29th of June free, and mark your calendar for this Women International Conference. We are bringing this first time in India, and it's a networking platform with all the knowledge which will be shared to all of you. So please mark those dates. We'll be releasing our women portal for flexi working, part-time working also. So this is at Mumbai, Maharashtra. all preparations are made, and we will be releasing our announcement very soon officially, and link for registration. So we have limited participation for the benefit of the networking. So I request all of you to take the benefit of early bird discount and register yourself. And today we have with us a Padmashri Cresto will be taking us through the session on audit, and our moderators Rishu, Ritu, Prachi, Forum is also our speaker on GST. So I welcome both the speakers, Padmashri and Forum, to this forum for sharing your knowledge. So, new litigations have started in GST, and we thought okay, we have this kind of sessions. So, GST is every time always majority of the participants are there for GST, and so we'll be serving you the knowledge of GST also along with audit. And my dear friends, my dear moderators, Prachi, Ritu, Rishu, and one more. Where is she? I can't see. Anyways, again, my office team working very hard for bringing out to all of you this programs. So, friends, stay connected, my dear participants who are eagerly waiting every Wednesday, 3 to 5 for this session. I welcome all of you for this webinar, Yashaswini. I feel that all are successful women, Yashaswini, and and all are eagerly waiting, Yashaswini and idol. Idol means, what is the meaning of idol? Now you all of you must know inclusivity, diversity, all are outstanding performers, and all are leaders in the profession and as well as in the personal life. So this is what the theme we have kept, a successful women and idol, so which all of my entire women fraternity of the profession. So I feel all of you are successful women. With these words, I welcome all of you to this webinar series of Yashaswini. Welcome all of you and have a great learning. Thank you very much.
Thank you, Kemisha ma'am. Thank you, Preeti ma'am, for such a wonderful address. Now we will go ahead with the first speaker. It's my pleasure to give the introduction of our first speaker, Padmashri Cresto. She is a partner with Audit and Assurance Practice at MSKC and Associates, and also heads the corporate legal function. She is head of monitoring and remediation in the firm. Having a 20 years of extensive experience, she is also expert knowledge of audit tools. She is special invitee to the Auditing and Assurance Standards Board for the year 2024-25, member of FRRG, special invitee for Central of Quality Audit Quality Directorate ICAI for the year 23-24. She has been awarded the title of Superwoman of WIRC by WIRC of ICAI in March 24. We are having such a learned speaker with us, and the topic is also very much related to us. I welcome Padmashri ma'am and hand over the mic to her. Welcome, Padmashri ma'am.
Thank you so much. Thanks, Kemisha ma'am, and thanks, Preeti ma'am. Preeti ma'am, you're always as inspiring as you can be. I think whenever you meet something new, I would always gather from you. And thanks, Prachi, Forum, and the other speaker, and also all the team who has worked so hard for all these, sessions, and then selecting the topics, coordinating with all of us, things like that. I think that's a wonderful job. Thanks so much for bringing out that. So without much talking off topic, coming directly to the topic. So what we are going to do today is audit quality and SQC1. As I think in the introductions, it was appropriately said that this is the month of May, and April-May is quite heavy for all listed companies for the purposes of audit closures, because we have to finalize all the financials by 30th of May, basically. the final date being 60 days within the closure of the year, as it is a listed company based on SEBI LODR. Audit quality is something that's of super importance these days. Within India, out of India, globally, everyone is talking about audit quality. Why has it become so important? Every day in the morning when we open our newspaper, when we open our news apps basically, or on our WhatsApp or on some of the other groups, we are seeing that the regulator is active. He has put in a penalty of 1 crore, 2 crore on the auditor and things like that. So what is it that actually can come to you a safeguard when you're doing an audit, when you're doing a certification? So certifications are also not spared from this. Tax audits are not spared from this. 3CEB is not spared from this. So everything gets covered by the regulator, and regulator is looking at various things. So when I mean regulator, who all are the regulators who are there active? It's not only NAFRA, the super regulator which has become super active in the last 3 years, who has been formed and has been super active, but we have the QRB, the FRRB, the ICI Disciplinary Commission, Council, then you have IRDA, then you have RBI. So why audit profession is actually maybe you can say that it is less popular, or it is not gaining so much of popularity, or it is becoming more risky, is that people are saying that, boss, audit is a serious job. You can do it only if you maintain certain quality. So being part of the, last year I was part of the Center for Audit Quality Directorate also. So there we had released some tools as well as certain Excel sheets. So one of the things that we thought about is that giving everything in PDF doesn't work. Let's make it more workable. How can we make it more workable? By giving checklist in PDF, in Excel, in Word, and things like that. So as it was mentioned in the beginning, there are so many templates that are available. All that you have to do is you have to start making use of all these things. Another thing that is very important is that when we are talking about all these regulatory things and the penalty and things like that, what is it that can save us? It's actually the audit quality that can save us. And what do you mean by audit quality? What is essential is that we have to document everything that we do. So there's a simple funda that we all have to use, that if it is not documented, the work is not done. So audit quality is gaining super importance across the globe. Now we are talking about SQC1, but there is already an exposure draft of SQM1. Okay, we are going to transition soon from standard of quality control to standard of quality management, isn't it? So what is standard of quality management? It's like IFC. So we'll talk about when we'll cross the bridge when it comes, but then it's more complicated, and it is going to make you spend more time and energy on that, because in order to provide audit report on any financial statements, you have to have your own controls in place. That is what the standard tries to tell us. Now we will come to the SQC one regime, wherein this is something that's actually each of the firms should know. So the title is quite long, and what does the title say? The title says that quality control for whom? For the firms that perform what? That perform audits. So audits doesn't include only statutory audit. It can include any kind of attestation function. Basically, it is audit. It is special purpose audit. It can be tax audit. It can be any other kind of audit. Review of historical financial information. So that is your limited reviews, which is under SRE 2400, 2410, and other assurance and related service engagements. So ISRS also gets covered here. ISRS 4400 is your AUP, agreed upon procedure. Guidance note on certificate also gets covered. So this is a standard that has to be followed by all the people who are in practice, basically, who are doing audits and who are doing any kind of attest function in terms of certification or anything. So what does this contain? So this is something that's very relatable and what you do day to day in your life, but then maybe you have not documented every element of it. All that we need is that, we need to step up and we need to start documenting everything. So what is SQC1? Let's spend a couple of minutes on that. So for example, we are issuing an audit report today. So what does it require? It has all these elements or the pillars of SQC1. Whatever is displayed on the screen is nothing but a table of content, which is in short, pillars of your SQC1. What are the pillars? First is leadership responsibilities and quality within the firm. If you have a smaller firm, for everything you are responsible, right? Even for the chai wala you will be responsible. But in larger firms or in a firm that has got 3 to 5 partners or whatever, more than 5 partners, whoever, then what are the leadership responsibility within that firm? Who is the one who is responsible for upkeeping the quality and ensuring everything is in place for the firm? You actually have someone who is taking care of it in your firm. Even if there are 2 people, it's always like you do this and I will do this. So it's always there. But the thing is that, have you written it down? Have you made it a policy? Have you made it a small document which says that this is what is supposed to be done by me and this is what is supposed to be done by you? We overlap also. That's not a problem, but then you have to write it down. Second, ethical requirements, including independence. Who better than Kamisha ma'am can tell you that the ethical requirements and independence requirements are of such importance and of such heavy implication. You do the entire audit, but if you're not independent, it's like a house of cards. It can just fall off any day. Before starting the engagement, you and your firm has to ensure that you are independent. During the engagement, you have to be independent. At the close of the engagement, you have to be independent. So this is something that has to be followed by all of us. This is not something that can be taken at any point in time lightly by us, because if you don't comply with one accounting standard, there will be a small qualification. But if you are not independent, whatever you do, how much ever good work you do, everything is useless. Because if you are not independent and if your behavior is not ethical, then nothing can save you, right? So that's the importance. Coming to acceptance and continuance. What is acceptance and what is continuance? Say, what is element basically tells us is that do not take the clients, actually it tells us something that we basically know very well, which is professional skepticism. What is professional skepticism? Professional judgment is to accept things at the face value. Always ask the question why, who, when, how. Always ask these questions, right? So acceptance of client is not that someone walks through my door and I'm ready to do whatever work he's giving me. It also requires that whether you are ready to accept this client. We look at the elements that are necessary for when do you accept a client. Maybe you don't have the expertise, maybe you don't have the maybe you don't have the right number of staff, maybe you don't have resources, maybe you look at the reputation of the client, you don't want to get into some trouble. You look at the market background, there are some media things that are not in favor. There can be some regulatory matters. MCA has 2 notices on them and everything is wrong over there. So any of these factors may make you rethink whether I should accept this client. And you have accepted some client, you have to continuously evaluate the continuance. Say for example, everything was safe, I've taken that client, and today there is a large fraud that is investigated and that is there in that client. So then you have to again read the path of which you have accepted the client. If you have accepted, whether you are still okay to continue with that client, whether you have the new capability, for example, whether you have the capacity to involve time and energy into forensics, time and energy into long meetings, time and energy to get into the complexities of the engagement, even deal with the regulator. So you have to set your own risk appetite. Some of us do based on our risk appetite. So something that may suit me may not. I may be a very conservative person. I may be taking something which is only, say, I may be investing only in FD. Someone may be investing heavily in equity. So it is my risk appetite. Similarly, to handle the client, I may be taking a client which is actually having heavier risk. Someone else may be taking it lighter risk client. So there can be a number of combinations. So you have to set your own risk appetite, and then every time a new client comes in, you have to think about whether I'm ready to take this client, and if something goes wrong, then I have to reevaluate whether I'm okay to continue with this client or I should sever my ties with this client. So that is something that actually has a direct impact on quality. Next, the human resources. So human resources basically talks about all the policies and procedures related to human resources. How do I take them? Are they? Do I have a job description? Do I take them properly? Do I evaluate them? Do I take them on merit basis, or I just take them on the basis of his nephew of this person, sister of that person, brother of this person, or I'm giving importance to quality over there. Also, the evaluations, performances, everything that we do is actually directly related over there. Am I giving enough and adequate weightage to quality? Am I rewarding the people who are bringing in quality, or am I just doing favoritism, which is not in lines with quality, but then I'm just doing it for the sake of because I like someone. So that's again human resources. That even goes to the partner level to say that, whether partners are evaluated on quality parameters. If you have more than 3 4 partners, then how much each one is taking, whether good quality is rewarded and whether bad quality is actually followed with a carrot and stick approach kind of. Okay, if someone has miserably failed and then all the regulators are behind him, are you allowing that person to still sign some of the audit reports and make other audits also risky for you? Or you are refraining that person from, you are giving that person some help so that he can recover and then he can do the audits later maybe. Assignment of engagement team actually again relates to your human resources, which is, are you allocating the right people to the right job? Okay, it's not always the perfect combination to send 2 qualified people and 2 articles or 3 articles. A smaller audit, each one of us knows, is that needs lesser time, lesser expertise. A larger audit needs more people, more expertise. Some typical audits like a bank or an insurance company or a cryptocurrency company will need some kind of a specialized knowledge. If it is Ind AS, it needs some other knowledge. If IFRS, then it needs some other knowledge. If it is accounting standard but complicated, derivative transactions, if in Ind AS, if it is 109 and things like that, then it will need some expert knowledge. If a company is highly automated, you will need an ITGC person, right, to check all the IT related system. So all these things get captured under the assignment of engagement team. Are you having the right people and are you assigning the right people to the right job? Someone who is having a 7 years experience only on manufacturing, all of a sudden put into a bank audit to lead the bank audit. He doesn't know anything. Where is the master circular? Where is the RBI narrative? Where to look for, what to look for? He has never seen a branch return. He has never seen what is NPA. Okay, so that will put him on spot, right? So that will actually impact quality as well. After doing all these things, also human resources include trainings, right? How much trainings, how much upkeep are you doing for the team? How much resources, how much you are empowering your resources? So do you have some updates within your teams? Are you circulating some internal notes, newsletters, memos on difficult contentious matters, or discussing it during some, say, weekends, some dedicated session, something or the other where you are doing? So these kind of things actually, once you prepare, then you come to engagement performance. So when all these policies, procedures, everything is set, how is the engagement team performing? So are they following the client acceptance norms? Are they following the proper, the ethical policies? Are they following the EQR policies, that is the engagement quality controller policies? Are they following the supervision norms? Are they ensuring the timesheet is booked on time? Or are they ensuring that they are adhering to budgeted hours? So all these things come under the engagement performance, which is actually the audit file in short. So engagement performance is nothing but your audit file. How well is it documented in all respect, right? Then comes, we have a very simple way of understanding that, if we have someone who is checking us from time to time, we are always in line. For example, if you have a dietitian appointed, or if you take a gym membership, I know most of us take gym membership, but we don't go to gym, is a different issue. But then if someone is checking on you, if you have a dietitian and if she has a diet plan for you, if the person has a diet plan, and then if that person is, suppose, checking with you that how much you ate, whether you ate this much calorie, whether you ate sweet, whether you ate this, that, then you are still in check. But if no one is checking, then we are free to do whatever. Because generally it is a, taken that if no one is checking, I am free to do whatever I want to. So monitoring is a very important piece, and then monitoring is within the firm. You have to have a mechanism to check whether all these 5 elements that we talked about is happening, not happening. Then do, as you do in the case of, client, this is a continuous process. If you come out with problems, if you come out with deficiencies, don't sit with it. You have to prepare a plan as to how am I going to correct my problems. For example, someone who is given a supervision responsibility is not supervising properly. Okay. So, what do you do there? Then you have to course correct. Maybe that person has to undergo some training. Someone has done a wrong interpretation, has not discussed something. Then you have to bring him to the right perspective, give him additional training, give him additional this thing. Now, out of the 10 people that we have in the firm, say someone is overburdened, that may be his problem. Then you find that as a deficiency, that okay, this person is overburdened, so I may have to get more staff or reallocate the work from him. So all that you will have to do, and then you again come back to how you report to the leadership and then how you take it forward. Now, why this is important in terms of quality? Each of the elements that we spoke about actually impacts the quality, right? So if you take a wrong client, it will affect the work quality. Why? Because maybe you have taken the wrong client by mistake or intentionally, I don't know. Then there will be a lot of things that you will have to manage. It's not easy. If the client is so adamant, or if the client doesn't want you to qualify something, then you are in a very difficult spot. But your professional ethics tells you that you have to qualify in that case. Then you to actually substantiate, or to actually make him understand that why qualification is necessary, is very difficult. And if you succumb to the pressures of the client in this case, then in the next round under the regulatory review, you will have a problem. If ICI disciplinary committee picks it up, or sorry, for example, QRB picks it up, and if that goes to disciplinary committee, if NAFRA picks it up, if any of the regulator pick it up, RBI picks it up, there is a problem. Why did that happen? Because the root cause was basically you accepted a wrong client. If you compromise with independence, again the same problem. If there is no leadership for quality and no one is bothered about quality, then it is as simple as the whole firm will go into a different level. And then there is no quality, then the trouble is at the corner, right? Same human resource. If you do not empower your team, and if you do not talk to them when it is necessary, if you do not provide them adequate training, updation, anything, then ultimately the quality of your work will suffer. Sometimes we all feel सब कुछ मुझे ही करना पड़ता है, or everything I have to do, there's no one to help me. Why do you end up in that situation? You have taken people, you have delegated, you have trained, then you have to reassess whether the people are able to pick it up to that level, or because of someone else's inefficiency is that I'm suffering. So all these impact quality. Again, we talked about example wherein the manufacturing company versus RBI company, RBI reckon company. So if the person doesn't know where to go, where to search for a master circular, how to calculate NPA, then obviously it is going to affect quality. There's a complex 109 calculation. He doesn't know whether it is FVTPL or otherwise. So there is a problem. You're going to end up in a problem. Engagement performance. You have done everything, but the team doesn't do anything, or they do not supervise, or there is no EQR appointed, or things like that. Then again, you get affected, because ultimately you have done everything, and then you have to find out where is it going wrong. Is it that they are asked to, they are not paying attention, or they are saying yes and they are not doing, or you yourself are not investing so much time. So all these things, in fact, affect quality. This is SQC1 in short. We will look at the detailed elements. Okay. SQC1 is such a topic that you can have a full day session. You can have like 3 hours session on each of these pieces, but I've kind of tried to wrap up everything into this 1 hour. And there are certain measurables. So when you are undergoing peer review, so something that's very important, you have peer review phase 1, phase 2, phase 3, right? So for phase 2, you have an extension till 31st of July. So there are whenever I interact with people, or whenever I'm speaking with various people and various seminars, many people are not aware that they will be subject to peer review, and they're supposed to be getting themselves peer reviewed because of this phase 2 and phase 3. So if you are doing any attestation service, if you are doing any kind of audit, you should be subject to peer review based on phase 2 or phase 3. It's not necessary that if you're doing listed company, then only you should be peer reviewed. So please note that, please go back to the announcement and check where do you fall. And if yes, then you have to get yourself peer reviewed. So for this phase 2, it is 31st July is the last date, and then there is phase 3 for another year. So you have to check yourself, what is it applicable to me, and then you have to get yourself got done with that. And when you go to peer review, I mentioned peer review, when you go to my peer review, there's a long questionnaire, right, which contains some 60 to 63 questions, and then so there are some subsections, sub questions also. So when you go to that question, all the questions are nothing but paragraphs from SQC1. Whether you have a policy on client acceptance, how do you accept the client, when do you resign from the client, whether you look at independence, whether you look at ethics, whether you look at engagement quality review, or whether you look at all these questions only and only contain SQC1. And if you do not pass SQC1, obviously the whole firm's quality control collapses. So what is the purpose of this standard is basically to establish a quality control designed to provide the firm with a reasonable assurance. So there are two types of assurance, reasonable assurance and limited assurance. Reasonable assurance is larger assurance, and limited assurance is negative assurance, or no, or it's like nothing has come to my attention. Is limited assurance. Reasonable assurance is everything is complying with everything. That's reasonable assurance. So audit report is a reasonable assurance, but there can be a limited assurance review engagement. So SRE engagements are limited assurance engagements, right? You don't give full assurance over there, or the reasonable assurance over there. So these are the elements. We already discussed each of them in brief. And that's why at the first table of contents, I took some of time to just make you aware of all these things. So further requirements or leadership within the quality of the firm. So someone who is a senior partner, CEO, managing partner, whoever, he has to assume responsibility for SQC. It's a culture. Quality is always a culture. So there was one saying I had read somewhere that, quality is not a one-time occurrence. It has to be a habit. So unless you make it into a habit, you won't be able to sustain it, and you won't be able to go ahead with it. So quality is always a habit, and it cannot be a one-time feature. And with the clients and in dealing with seniors and juniors. So quality is in totality a culture. Anything that comes up, not in line with quality is always substandard quality, and that will not sustain any kind of, test of the weather, I can say, right? So we talked about rewarding the high quality work, which is necessary. Then all this quality culture can be actually communicated through trainings, internal memos, informal discussions, newsletters, mission statements, vision statements, and all that stuff. The people who are actually responsible for quality has to be experienced and should have the ability and necessary authority. It's not that some junior most fellow, you will give them the authority for quality and no one is listening to him. The guy who is in charge of quality has to have appropriate authority, as well as he is taking the responsibility for that. If anything goes wrong, he's responsible, and to everyone, he has to have that power that he can actually speak to them, and they have to listen to him, or they have to follow what he's saying. That's necessary, because any authority, any responsibility without any authority is as good as no authority, right? So that's the case. Ethical requirements, including independence. We all know a lot. Every year, I think we have heard about the independence training. The Code of Ethics got revised in 2020. there's a lot that we have to comply with. There is section 144, there's guidance note on independence, there's code of ethics 2020. Everything we have to read and we have to be compliant. There are some corporate governance guidelines by RBI, some corporate governance guidelines by IRDI when we are doing that kind of audit, and trust and things like that. So we have to comply with all these ethical and independence requirements. What is the ask over here? So there has to be someone who is responsible for this ethics and independence. There has to be a continuous education and training. There has to be an annual declaration, and if possible, in every file, you should have a declaration of independence from all the people who are involved on that file. Right? Annual declaration is a must. Then you have various, I'm not getting into the details of code of ethics, but you know the 5 threats that are there. Okay, you have to match, you have to ensure that you have put appropriate safeguards against the threats, right? Ultimately, you have to do independence inspections or the monitoring. Then you have to have a process for dealing with non-compliance. There are firms out there who take independence so seriously that if there are breaches in independence, so it's always like this, that if your system doesn't have teeth and if it cannot bite or it cannot pick up anything, then the system is not working. So you have to have some parameters for breach of all these policies. So if you have a breach of independence, for example, then you have to have some warning, memo, monetary penalty, I don't know, whatever, stop the promotion, whatever. There are firms out there who take independence very seriously, and then in case of independence breaches, their promotions are stopped, their bonuses are not given, or they are asked to go, whatever. So there are different kinds of, situations that can arise, a serious breach or a normal breach, or how is it, right? So you have to establish a policy and procedure with respect to independence. The firm has to get enabled to actually communicate its independence, identify the circumstances, and then also wherever there is a threat, there has to be a proper resolution that has to be put in place along with action that is required, right? So there may be one question in your mind from the last 30 minutes. I'm talking about policy, procedure. Where do I get them? There's a very beautiful implementation guidance on SQC1. At the end of it, you have illustrative policies, policy statements, policies, procedures put down there very nicely. All you can do is that you can pick that up and then, modify it to suit your requirements, and wherever it is required, nominate a person here, so nominate a person there, put up a additional procedure here. If you want, you can put up there. If you actually adhere to that set, even this client acceptance checklist, there is an illustrative checklist already available. There is an independence declaration format that is already available in the SQC1 implementation guidance. So there's a lot of material that's already available, and this is not from today, this is from 2009, and we are in 2024. So it's applicable from 2009 itself, right? So all you have to go is you have to go there, pick up, and then appropriately modify that policy for your firm, ensuring that you are not deviating from the compliances that are required, and then you can start implementing them immediately. When you make the policies and procedures, you are not supposed to keep it with yourself. For example, if I made a very beautiful independence policy, but then I'm keeping it with myself because it's very close to my heart, I spent a lot of time creating it. No, we have to popularize it, we have to communicate it, everyone should know about it, everyone should know what happens if someone breaches, what happens if someone does good, what happens when you have to onboard a client, what happens, how to resign for a client. So all these things have to be very much given to everyone, and then there has to be trainings, there has to be educations, there has to be sessions held within the firm, maybe on a couple of hours, you have a formal, informal discussion, and then you have to popularize it more and more so that people start thinking and they also start applying. One thing I've always seen is that out of sight, out of mind. If you do it one time and then forget it, everyone forgets. And you also tend to forget it. You have to do these things repeatedly. Every year, twice in a year, something. Take out those 2 hours and then focus on these things. And then what are the changes required to these things? Unless we do that, it's not going to work. Client acceptance, we talked so much about client acceptance, that how do you actually talk about, how do you actually onboard a client? So client's integrity, ethical behavior, complex industry, all these things actually matters a lot. So certain matters that are considered for client industry, can be, identifying the business, reputation, nature of client, who are the KMP, who is the director. So if there is a client where there is too much of a litigation, everything is in the public domain, you may not be ready to take it. That's client acceptance. But the point is, we do not have that written down as a policy, which we should do, right? So that's our risk intake. So I may be less a risk taker, someone else may be a more risk intaker. So it depends. They can tweak their policies accordingly. But then there has to be a policy and they has to be complying with it, or they have to be adhering with it. Even for resignation. So there's a resignation guidance or the implementation guide for resignation also that is issued by ICI. In case of listed company, there are complications in terms of SEBI LODR, that when can you resign and when can you not resign. You have to adhere to it, and then you have to put in place. You can't resign from the client just like that because he didn't give me information. If he didn't give you information, you are supposed to actually qualify it or put a disclaimer. If you don't do it, then you are ethically wrong. If you're asking that someone else is going to do it and I am washing off my hands, that's also not right. So you have to ensure that all these things are there in place, and that's about the client acceptance, re-acceptance that we spoke about. Human resources, we spoke about a lot about human resources. It's about the capability, competence, commitment to ethical principles. You have to have a process around how do you recruit, how do you put a performance evaluation, capabilities, competence, career development. How do you think about your estimation, and then what all trainings you do. Now there can be a thought that all these can be done only by larger firms. All these cannot be done by smaller firms. All these cannot be done by medium firms who will invest time and energy in it. But if you're doing audit, you're supposed to do all these things because SQC1 is applicable at the firm level and not at the engagement level. So you are required to do this, and you are required to put some time and effort in view of this and ensure that the deliverables that you issue are adhering to the requisite audit quality, right? So human resource, we talked about performance evaluation, not only of the employees, of the partners also. Assignment of engagement team, again, who is assigned where, what is the capacity, what is the capability, what is the technicality, so what is the experience, what is the, how much does he understand the senior. So there was one very interesting case, if you see. So there was a EQCR who was only like post qualification year, 1 year experience was put as an EQCR against a 30-year experienced person. So that's inappropriate. The assignment itself is inappropriate because this guy doesn't have any experience, whereas that guy has too much experience, and then that was a complicated engagement also. So your quality control itself failed, or your quality control did not give that right picture of how to assign engagement quality control reviewer, right? Further in the engagement performance, as I said, it is completely about the audit file. So how engagement teams are briefed on understanding their work objectives. So whether someone tells them what is to be done or they are doing whatever they want. So whether they are complying with auditing standards, accounting standards, or they are just doing whatever they want. Process of complying with the supervision. How do they supervise? Do they sign any memo? Do they look at the documents properly? How do you review the work? What is the documentation standard, hard copy, soft copy, keeping it in a folder, closing it on time. All these things matter, whether you obtain limited letter of representation before audit or after audit or never obtain. Then comes another element of consultation. If there are difficult or contentious matters, you end up calling someone and asking. So do you write that down? What did you ask? Or you just said that, okay, I'm fine with it, or I'm not fine with it. So when you have a qualification in your audit report, or when you have a complex situation, you always have to have some consultation within the firm, or if you can appoint a person who will help you with all these things. So there is a provision in SQC1 for people who cannot have all these capabilities can take help for consultation, for EQR services, all that. You can take it from outside. So that's possible, but these are to be complied with. EQCR, we talked about so much. So EQCR is an engagement quality control reviewer. He is not the engagement partner. He is not the signing partner, but he is there to ensure quality on the file. So all the major things from planning to the execution to the closure to the qualification to any adverse opinion or to an EOM, everything has to be understood, agreed upon, and also all the review points of EQCR has to be properly documented in the file to show that he was involved. What is the type of engagement where EQR is applicable? As per SQC1, it's only listed company right now, but then depending on the nature, size, and complexity of the firm's clientele, you can decide something more than a listed company also. You may set up a turnover criteria, you may set up a complexity criteria, whatever you want, and you can actually appoint an EQR with respect to that. Criteria for EQR, again, he should be experienced, he should be having the knowledge, he should be having the industry experience and all that stuff. If you do not have the capability, you can take it from outside as well. Monitoring, we talked about so much. So what do you do in monitoring? Pick up any engagement file, pick up any client acceptance, pick up any independence matter, and then see whether it is properly done, not done. If not, then for all the things, you have to actually go back, correct your course of action, then do the training, and then do the remediation, and then close. And then you will also have to actually do a proper root cause analysis if that is applicable. Okay, so that's in a very small piece. That's about SQC. We are going to touch upon something very important next. Also, the complaints and allegations is part of SQC. You have to have an open channel for complaints and allegations by the client, by an outsider, or within the firm for any issues that you come up with. So this is very necessary. Okay, and this acts as a feedback process for you. So complaints and allegations, if you receive, how do you handle it? What is it that you do is something that has to be written down as a policy. Documentation, yes, please document all the policies. Already said that you can get it from implementation guide of SQC1. Documentation size, nature, it depends on complexity, size, geographical spread of the firm. So you need to keep all these things in mind, and then accordingly you have to close on these things, right? What is SA 220 and what is SQC1? SA 220 is all these same things, ensuring all these same elements at the engagement level. That is, when you pick up an audit, all these elements have to be complied with. That is what SA 220 says. SQC1 is at the firm level. So firm level, you make a policy that client acceptance, this form has to be used. SA 220, when you come to, that form has to be used on that client itself. Independence declaration says that you have to have an independence declaration. So in the SA 220, you come to the file and then you have to have a SA 220 independence declaration on each of the files. So that's how it is mapped. That's the difference between SQC and SQC1 and SA 220. Next is a very important thing, which is audit quality maturity model. Now, when you get done a peer review, there is an additional annexure there onto the peer review, which actually talks about audit quality maturity model. This was first time applicable from 2023, 31st March. That was the first cycle. We are sitting in the second cycle. We have completed the second cycle rather. So what is audit quality maturity model is actually measurability of SQC1. How do you measure all those things? So this will apply to all the firms which are auditing the following entities: listed entity or banks other than cooperative banks audit, insurance companies. So as of now, if you're doing audit of any of these, then this AQMM model will be applicable to you. What you have to do is this. Okay. So basically, we'll come to like what are the things that you need to do about. So there is a scoring mechanism. 600 is your total score. So practice management and operations can score up to 280. Then human resource management can score up to 240. And then strategic and functional scoring can be up to 80. What happens with the score? You have to score 75% in each of these sections. Then what happens? If you're more than 75% in each of these sections, then your audit quality is matured. It indicates that firm has made significant adoption of standards and procedures, has to stay focused on leadership in all areas. If you have 50 to 65%, you have to focus on optimizing further. And if you're 25 to 50%, you have to improve a lot, and 25%, then you have to take immediate action to ensure that your quality is enabled. Now, what happens with this? Along with the peer review certificate, your stage of 1, 2, 3, 4 will be determined. You will fill it up, self-assessment, and then peer reviewer will fill it up. Based on that, institute will look at, and then they will grant this 1, 2, 3, 4. Already there is a list that has started going in the public domain where all peer review is completed. The stage of the audit quality maturity is also being put on on the website of ICI. So what happens with that? So in future, if someone wants to come to you for an audit of a listed company or a large company, he'll go to the site and check what is the level. If you are less than 4 or 3, then maybe that person will never come to that firm. So that may be the implication that you can see. So how mature are you in quality is something that's very important. Now, how do you distribute this 280? Again, there can be a full day, 2 day session on AQMM, right? I try to concise it into as much as a nutshell. This is too much of information in a nutshell, basically. So when you talk about 280, how are these bifurcated again? Practice areas of the firm gets 12 marks, then workflow, practice manuals, whether you have all those things standardized, quality review manuals, are you using some audit tools to document service delivery, what is the effort monitoring, how do you do budget versus actual and all that stuff. Then quality control, do you have all the policies and procedures and compliance with SQC1 in place? Then benchmarking of service delivery, are you doing it for your service? Client sensitization, how open are your clients speaking about? How much are you adopting technology? What is the level of your technological adoption? The revenue, budget, pricing, all that. So in each of these 12 marks, 16 marks, 80 marks, 64 marks, all these, when you see, each of these have subcategories, sub-questions. Some questions containing 2 marks, 4 marks, 8 marks, 9, 10, like that. So there are lots of marking criteria. And then there in some of the questions, there is a range also given, which is also applicable. So you have to score yourself, and then only you can actually proceed, and then peer reviewer can proceed on that, right? Then for the section 2, you have resource planning, monitoring as performance policy, training and development, then turnover compensation management, qualification skill set of people, then what is the KRA, KPI, and all that. So if you see, human resource is almost equivalent to the overall practice management, which is at 240. Right? So you will have to take care of all these aspects if you want to score 75%. And the third section is strategic and functional, which is again overall on a operational aspect, financial statement and other things. Then infrastructure and physical infrastructure, other infrastructure, then practice credentials, how much you have. And also if there is any regulatory inspection or things like that, then have you got a negative remark and things like that. So few of the questions also have a negative marking. So if you are compliant, then it is 0, and if you are non-compliant, then it becomes negative also. So those kind of status, the criteria is also available, and all these things are necessary if you want to stay in the audit profession. All these things become quite important for all of us to stand there, right? So I think largely this is in 1 hour it is very difficult to concise audit quality, but I've kind of crushed and concisely put every audit quality matter into one place. You also have some questions and assessments related to the sessions today. So that is available on the chat, right, Prachi? Hello?
Yes, ma'am.
Yeah.
So, ma'am, the PPT is so self-explanatory that we don't have any queries in our chat box.
Thanks, Ritu, and thanks entire committee for giving this opportunity. And anytime if you have any queries relating to this, please feel free to reach. Yeah.
Thank you.
Thanks, Ritu.
Yeah. Ma'am, I would like to present formal vote of thanks on behalf of WMEC and each one of us. So, good afternoon, everyone. Thank you so much, WMEC, Preeti ma'am and Kamisha ma'am, for giving me this opportunity, and special thanks for having this Women webinar series, Yashashwini. I would like to extend my heartfelt gratitude to our speaker ma'am for gracing the seminar and giving us insights on the need of our topic. And I am honored to have the opportunity to present this formal vote of thanks for such a learned speaker. Thank you, ma'am, for dedicating your time to this meeting. Your insights and advice have been invaluable, and your time and expertise are greatly appreciated. Once again, I want to thank you. And my sincere thanks to the organizers who handled the event throughout. A wide round of applause, and thanks to all the participants who made this event memorable one. Thank you, one and all. Thank you so much.
Thanks. Thanks, everyone.
Now over to Prachi ma'am.
Jay ma'am, please start with the second session. Ma'am, your voice, you are on mute, ma'am.
Can you hear me?
Yes, ma'am.
Yeah. Good afternoon, everyone. I have got the opportunity to introduce our next speaker, that is CA Forum Manushali. She's a qualified chartered accountant in the year 2017, and she's specialized in GST litigation. She has also completed her LLB from Siddharth Law College. She's a partner in DB Banushali and Company Chartered Accountants, and also leading the litigation department at the firm Consulting Age. She has completed her articleship from Deloitte and in statutory audit department. Post qualification worked with Bansi Mehta and Company. She is the convener of the Mullen Study Circle for the year 2024-25. She's a current core committee member with the WELL group, that is Women Entrepreneurs Learn to Lead. Was a committee member at the Thane Vikasa Students Committee, and he's a current committee member at various professional CA forums. On behalf of all our women committee, I welcome you, CA Forum. And now I request you to kindly take the session forward and enlighten us with your education and all the learning.
Thank you, Jai, for this wonderful introduction. Good evening, ladies and gentlemen. At the outset, I would like to thank Preeti Savla ma'am and Kamisha Soni ma'am for giving me this opportunity to present my views before all of you. I am very grateful to the WMEC committee as well. The session that is allotted to me today, that is impact of GST reconciliation in closing books of accounts. Now, to be very honest, this topic is so wide that a session of 3 years would be incomplete, would not be sufficient for this. However, I have tried my level best to compile everything and most important points that I could. So my today's session is divided into 3 parts. That is output, input, and general. That is output GST, input GST, and in general overall points. So to begin with GST reconciliation for output. Now, what are the steps that are required for us to reconcile our output GST? Coming to the first and the most important point, that is GSTR 1 versus 3B reconciliation. Now we are uploading our invoices in GSTR 1 and the tax liability for the same is paid through GSTR 3B. So it is very important for us to see whether the invoices on which taxes we have disclosed in GSTR 1, respective taxes on that have been paid in GSTR 3B or vice versa. At times, it so happens that GSTR1 due date is 11th and 3B due date is 20th of the month. So at times, clients may send us the data for GSTR1 in a separate backup, and a separate backup is received for GSTR3B. So clients may end up changing the sales data, which we may not be aware of or we might not be given the details of. So it is very important for us to do a detailed reconciliation of GSTR1 versus 3B. Next is books versus GSTR1. So invoices, the sales register, which we are going to final in our books of accounts, the audit accounts which are going to be audited, they have to match with the invoices which are uploaded in GSTR1. Now, why is this very important is our buyers are going to claim the credit based on the invoices that we have uploaded in GSTR1. as it is these invoices which are going to reflect in their GSTR 2A. So it is very important that all the sales transactions that we have reported and the invoices which we have generated have to match with the GSTR1 data. If they don't, then this may create problems at the time of department audit and scrutiny. Next point is books versus GSTR 3B. Of course, all of you are aware that we are paying all the taxes with GSTR 3B. So it is very important that we reconcile books and 3B data in case if there is any transaction which is recorded in the books, but the tax on the same is not paid, then we may pay it with interest as and when this transaction comes to our notice. So books versus 3B is also a very important point. As far as books versus GSTR1 is concerned, it is a very important point to note that not the total amounts are to be matched, but invoice-wise reconciliation has to be done. So the corresponding party can claim the credit and check if it is reflecting in that way or not. Next point is books versus e-way bill. Now this reconciliation is missed by most of the consultants and the companies. This is because books versus e-way bill reconciliation has got nothing to do with our GSTR1, GSTR3B, or GSTR99C for that matter. However, this is a very important point and is also the department's focus when it comes to department audit. So even though this is not important from the 1.3B point of view, but it is very important to reconcile books versus e-way bill. At times it happens that e-way bills are generated and invoices also generated, but for some of the or the other reason, the products are not dispatched and the e-way bill needs to be cancelled. Now, there is a possibility that e-way bill is cancelled, but the invoice is not, or vice versa. If there is a mismatch, then we may end up receiving notice. I think already there are notices which are issued for books versus e-way bill mismatch. So this is a very important point to be noticed. Also, a question may arise here that the e-way bill validity is only for 24 hours. So in case, if we come to know that the e-way bill had to be cancelled, but we have missed to do that, then what is the result? I mean, how do we come out of it? Because 24 hours have elapsed. In such a situation, what we usually prefer is we suo motu write a letter to the jurisdictional officer stating that this error has been occurred by us, and we are bringing this to your notice. So in case if in future there is a notice in these regards, this letter will come to your rescue. So this reconciliation is again a very important point. Coming to the next part, that is amendments. Now at times it so happens that GSTR1 is also filed and 3B is also filed. But at times the invoices may change for some or the other reasons later on. These changes may be done at the books level, but may not come to our view. So it is important to see if there is any invoice which is pending to be amended, and this amendment can be made in any return which is filed up to 30th November of the next year. So this due date was 30th September earlier, September return, but now it's not due date of a particular return, but it is a particular date. So any return which you filed up to 30th November of the next year, up to that return, you are allowed to amend the details. So even if now, since it is a tax audit and statutory audit filing season, if at this time it comes to your notice that any invoice is pending to be amended pertaining to the financial year 23-24, we still have an opportunity to make the changes and give the corresponding effects up to any return filed up to 30th of November. Now coming to the most important point, that is type of supply. Now it is important that it is not only to upload the sales data, but it has to be reported correctly. That is B2B, B2C, exempt data, etc. Now, why is this point very important? Our GST refunds of input tax credit are claimed for exports, deemed exports, etc. Deemed exports are basically sale to EOU. In such situations, we claim a lot of refunds. So if your disclosure in GSTR1 and 3B are not correct, you may face issues in claiming refunds. So specifically in cases where there are GST refunds involved of the output tax or of the input tax, as the case may be, it is very important to note that the export and deemed exports are reported very appropriately. Same is the case for sale to merchant exporter. Basically, sale to merchant exporter is making the sale at 0.1%. Now, most of the consultants, what miss is, for sale to merchant exporter is concerned, there are a lot of conditions which are to be fulfilled. One of such conditions is the merchant exporter has to make the export of that said goods within 90 days. If the said export is not made within 90 days by that exporter, then we will have to pay remaining 17.9% of tax and raise an invoice. So first and foremost point here is to check whether all the conditions of sale to merchant exporter are fulfilled. And if not, if an invoice pertaining to 7.9% liability along with interest have been generated and paid. This point is missed by most of the people, and then it becomes very difficult to solve these issues at the time of department audit, because audit comes usually 2 or 3 years after the returns are filed. So at that time, the interest liability is increased to a good extent. So if such transactions come to our notice well within time, it is better we raise invoices of the remaining 17.9% and pay interest on the same. Now coming to the important point of major reconciling entries. Here I have listed down what are the major entries which will always form a part of a reconciliation, come what may. So first of such thing is GST on free samples. Now, as you all are aware, free samples are basically giving samples which do not involve any consideration. So these transactions not a punish apply, and most of the people may not pay GST on the same. However, if GST is not paid on these free samples, it may lead to reversing the ITC which is claimed with respect to these free samples. So what most of the companies, especially the pharma companies, they face a lot of issues when it comes to free samples. So what most of the companies prefer is, even if they're giving the samples as free samples, they suo moto pay the GST on the same, because they don't want to fall within the bracket of ITC reversal. So it is very important to check whether there are any free samples and GST has been paid on it or not. If not, do we want to pay it or do we want to reverse the ITC on the same? Next is interstate stock transfer. Now, as a company level, if I have two branches, say for example, Maharashtra and Gujarat, I have two branches. Now, when I'm making a consolidated financial statements, this transaction is not going to make any major impact because it is going to nullify the effect, as one state will be showing a sale transaction and another state will show, one state will show a stock transfer transaction and another state is going to receive that stock. However, when it comes to GST, since the states are changing, it is very important that stock transfer where we are paying GST. If it is within the state stock transfer, there is no requirement of paying GST. However, if it is interstate stock transaction, even if this is not forming part of your financials, closing financials, this will form part of your GST reconciliation. And point has to be noted that GST has to be paid on these transactions. Coming to the next point, penalty charged from vendor. Now, at times it so happens that the vendor has not made the payment to us within the time allowed to him. For example, a month or two. If the vendor is not making the payment in that allowed period, we may charge him a particular late fee or an interest. Or at times there are also certain contracts based on which certain conditions are to be adhered. If those conditions are not adhered to, we may have to levy a penalty. Now, these transactions also form a part of the definition of supply, and GST has to be levied on these transactions. Most important point. Profit on sale of fixed assets, it forms a part of our P&L credit. However, when it comes to companies or body corporates, their profit on sale of fixed asset is calculated in the P&L credit based on the company law, since the depreciation has been calculated based on the Companies Act and not as per the Income Tax Act. However, when it comes to GST, it is very important to see what is the liability on the sale of fixed asset as far as Section 18 Red with Rule 40 and 44 is concerned. So it is important to note whether GST on sale of fixed asset has been paid or not. This reminds me of a recent case where there was a transaction of sale of land. Now, according to the client, it was a sale of land and was forming a part of Schedule 3 and there was no GST payable on the same. However, when I called for the documents, it was not sale of land, it was sale of leasehold rights. Now, the nomenclature for the client in terms of a layman terms might be sale of land, but actually it is a sale of leasehold rights which the client had received from MIDC, and the leasehold rights were for 99-year lease, and that leasehold property, that leasehold rights were given to somebody else. Now, it is very important to note, and a very litigated matter, that GST on transfer of these rights is payable. So in case if any of your clients are making sale of land, you need to very well check whether it is actually sale of land or it is transfer of leasehold rights. If it is transfer of leasehold rights, a conscious call needs to be taken whether GST is to be paid on it or not. Sale of scrap, this is a very simple entry. Whenever there is a sale of scrap, GST is leviable on the same. In case if it is sold without paying GST, it will have GST ITC reversal implications. So even if you are receiving an all-inclusive price for that scrap, it is better that you show it as 118% and you pay 18% GST on it. Next point is other incomes. There might be cases where P&L credit might have a lot of other incomes. So you need to check whether those other incomes, any of those incomes are forming a part of GST definition of supply. If they are, you need to check the GST implication on the same. So all these points are very important when you are finalizing books of accounts. Of course, when it comes to GST audit, there are a lot of more points which are to be taken care of. But I have listed down only those points which are important when it comes to closing books of accounts. Very important point which is missed by a lot of people. Goods sent for job worker to job worker for job work basis. Now, for example, say I am manufacturing shirts and I have manufactured the shirt and I'm sending it to the job worker for putting buttons on that shirt. Now, ideally, as per job work rules, that shirt after putting buttons has to come back to me within a period of 180 days from the relevant date. The relevant date is the date when the goods are sent to the job worker. In case if the goods are not received from the job worker in a period of 180 days, then this transaction in the eyes of law will be considered as a sale transaction and 18% GST along with interest beginning from the relevant date will have to be paid by us. So most of the people are missing because it is very important to have a track of when were the goods sent to the job worker and when were the goods received back from the job worker. Most of the clients miss on maintaining this data and then end up not having this data in place, which may result in having scrutiny proceedings. So it is very important to note this. Also, I have usually seen that most of the clients who are sending goods to the job worker are not filing ITC 04 return. Now, for clients having turnover up to 5 crore, ITC 04 needs to be filed on an annual basis. And for the entities having turnover more than 5 crores, have to file ITC 04 on a half-yearly basis. So in case if your clients are not filing ITC 04, please make sure they do. The due date of the same has just gone, which was 25th of April. Again, this may not have any major implications, but in case if your client faces department audit, this point is very well taken care of by the department officials. Next point is service to branch, that is cross charge or ISD. There is a very big UN cry when it comes to cross charge or ISD. So first, let me make you all understand in very layman terms what is cross charge and what is ISD. If I, as a HO, am receiving any services which are from outside, which are used by me, that is the HO, as well as the branches, then it is not a cross charge. It will form a part of ISD. But I'll explain you better by giving you an example. Say I am a chartered accountancy firm and I am giving services to the client who has their branches in Maharashtra as well as Gujarat. Now, if I'm giving a separate invoice for the services provided to Maharashtra branch and separate invoice for services provided to Gujarat, then there is no question of any cross charge or ISD. However, if I'm giving a common invoice saying that invoice for professional fees only to the Maharashtra branch, now that professional fees is not only for the Maharashtra branch, it is also for the Gujarat branch. In that case, GST on that entire transaction will be reflecting in the GSTR2A of the Maharashtra branch. Maharashtra branch will then have to pass on the relevant GST to the branch by making the calculation as per the ISD rules. Coming to cross charge, if a particular employee is working for the head office as well as for the branch office, then a corresponding invoice will have to be raised by the HO to the branch. For most of the companies, CFOs and CEOs are common for the HOs as well as branch. In such cases, CFOs provide services to the HO as well as to the branches. In such cases, the holding company will have to raise invoice to the branch in such a way that the tax liability will be paid by the HO and in turn credit will be claimed by the branch. This can be done by referring to the valuation rules. Now, there is a lot of confusion when it comes to cross charge and ISD. So there, as per the 52nd council meeting and the press release dated October 2023, there was a clarification that ISD is mandatory for all the entities. Accordingly, amendments have also been made to section 2, that is ISD definition, to section 20, that is manner of distribution by ISD and the relevant rules. However, it is very important to note that these amendments are not yet notified by the department. So till then, the clients still have the option to choose between cross-charge and ISD. There are a lot of clients who are supposed to do ISD but are still not doing it. The moment this amendment becomes notified, all entities will compulsory have to get ISD registration when there is HO and branch level transaction. It is very important to note that at times, if I'm selling a particular product at a particular rate, and in case for some or the other reason, the rate at which the product is sold changes, that is either increases or decreases, a corresponding debit or credit note needs to be raised in these regards. It so happens that we file GSTR1 and upload the actual invoice. However, if the rates are changed later on and a debit or credit note is raised in the books of account, the same has to be uploaded on the GSTR portal. So when you do the GSTR books and GSTR 1 versus 3B reconciliation, most of these points are going to be covered. However, still we need to check on a sample basis if there are any transactions on which there is a change in the rate and if a debit note or credit note is raised or not. If not, effect of the same has to be given as this is going to affect your turnover. Very basic point of classification of goods or services, nothing to do much with the closing of books of accounts. However, important to note, in case the goods or services which are classified by the entity, if they are not classified in the correct rate, then it may lead to an issue as far as books and GST reconciliation is concerned. So very important to check classification of goods and services. Again, coming to composite and mixed supply, this is going to affect your turnover because the valuation for composite and mixed supply is going to change. The rate of tax is also going to change. So it is very important to check whether the client has done proper bifurcation of composite and mixed supply, if any. GST on advances. So earlier when there was the GST era in 2017 was rolled out, earlier GST had to be paid on advances in case of services as well and in case of goods. However, with effect from 14 November 2017, there is no GST which is to be paid on advances in terms of goods are concerned. However, as far as services are concerned, there is still a GST liability which is to be paid on advances which are received in case of services. So it is important to note and make a reconciliation of advances as per books and as per portal. Also, corresponding effect of adjustment of this advances also needs to be given as far as services are concerned. At times, it so happens that clients also raise a purchase-related debit note or a credit note. And while passing the entry in the books of accounts, whenever they're giving us the data, it may so happen that even though the debit note or credit note is written to purchases, the clients may end up making a entry mistake and they may hit the sales ledger. And it may also be overlooked by us and we might upload it in the GSTR 1 and 3B. Very important to note that only sales related debit note and credit note are to be uploaded in GSTR 1. Purchase related debit note and credit note are not to be uploaded in GSTR 1. Even if they are done, it is a humble request to please get them amended as early as possible. Now, it is very important point to note that everyone and anyone is raising debit notes and credit notes for any mistake that is done at their end. However, this is a very big problem when it comes to department audit. They are not allowing debit notes and credit notes except for those which are allowed as per the section. Section 34 deals with debit note and credit note. Let's understand as per section 34, what are the cases in which a credit note can be raised. I have highlighted the important points for you. A credit note can be raised only in case of a tax invoice where your taxable value or the tax charged has been on a higher side. It is exceeding with comparison to what should have been charged. This is the first scenario. Second scenario, if the goods are returned by the buyer in that case. And the third scenario, if the goods are found to be deficient. Only in these three cases, you are allowed to raise a debit note or a credit note. However, practically, we are facing issues where clients raise an invoice, then they realize that the invoice was wrong, So they raise a corresponding credit note and then issue a fresh invoice. This is practically not allowed by the department, and we are facing a lot of issues where departments are disallowing these credit notes. We are already into GST appeals in case of disallowance of such credit notes. So please train your clients, especially when it comes to credit notes and debit notes. They can raise the credit notes only in these three situations. In case if it so happens that your client has raised an invoice, uploaded it on the portal, paid the taxes on it, and later on it comes to their notice that the invoice is incorrect, request to please amend the invoice and make it to 0, and then you can raise a fresh invoice. Please do not raise a credit note. It is practically not allowed as per section 34(1). Now let's come to debit note. Section 34 also deals with the debit notes. Debit notes related to sales are allowed only in one case, which is in case if the tax and taxable value that is charged by you is on a lower side than what it should be. For example, if I had to make an invoice for 150 rupees plus GST, however, by mistake, if the invoice was raised on 130 rupees plus GST, in that scenario, I can raise a debit note which is linked to that invoice amounting to rupees 20 plus the GST. Again, now it is not important to link the debit and credit notes to that invoices. However, when it comes to department audit, they very well ask us to match that debit note and credit note are related to which sale transaction. So it is not important to link, but they need to understand which is the sale transaction so that they understand whether the credit and debit notes are raised as per section 34 conditions or not. I have also documented few important documents which are to be maintained by every assessee. Of course, tax invoice is required to be maintained in case of a sale transaction. However, it is important to note that a bill of supply needs to be issued if an entity is dealing with exempt supplies or if an entity is registered as a composition dealer. Then it is very important to note that an ISD invoice has to be generated if the person is registered as ISD. Delivery challan has to be generated for cases which are noted in Rule 55. One of such situation is where, like I mentioned just earlier, if you're sending goods to a job worker, in such situation, a delivery challan has to be compulsorily made. A delivery challan also has to be made when the goods are coming back from the job worker. These documents are to be reported while filing ITC 04 return, which I just mentioned. Again, credit and debit notes needs to be maintained for section as per section 34. Now, I've listed down a few examples where there is a mistake which is done in filing GST return, and how do you rectify that mistake? For example, an invoice is not reported or a wrong invoice is reported in GST returns. Then if the unreported invoice can be reported in any subsequent return and the wrong reported invoice can be amended in any subsequent return, which are filed up to 30th November of the next financial year. Now, say for example, these invoices come to your notice even after 30th November is passed. Say for example, in the first week of December, you begin with the GST department audit and not department audit, GSTR 99C working. And at that point of time, it comes to your notice that this invoice is not reported or wrong reported. So what solution will you come out with? So the only solution is you can report this transaction in GSTR 9 and tax can also be paid through GSTR 9. However, this is only in case of sale. In case of purchase, if any ITC is missed to be claimed up to 30th November, any return filed up to 30th November, you cannot claim the input tax credit of that in GSTR 9. Only additional liability can be reported in GSTR 9. Additional credit cannot be claimed in GSTR 9. Next scenario, if a wrong invoice is reported, which came to your notice, you amended that invoice. However, that amendment was also made wrong. Now, once the invoice is amended, you cannot amend it again. Again, the only option is to rectify all of these and make the correct disclosures in GSTR 9. However, it is important to note that as far as payment of the liability is concerned, you can make the correct payments in GSTR 3. Now, when it comes to RCM supplies and deemed exports, say for example, I am a transporter and I have chosen the option where the recipient is paying taxes on RCM basis. However, if I am a registered person, then in that situation, I will have to file GST returns. And if I'm making a transaction to a B2B supplier, B2B recipient, then in that case, I will have to report this transaction in the B2B window. Now, at that point of time, when you would report a transaction as a B2B sale, there is a checkbox to select RCM. Now, in case if you so happen that you miss to choose that RCM checkbox, then it will become a normal B2B transaction. And in the system generated return, you will have a auto calculated tax liability on that transaction. So it is very important to make a note that RCM supplies are ticked off. In case if not ticked off, of course, you can amend that invoice. Same is the situation for deemed exports. Exports made to EOU, you have an option to select deemed export. In case if it is not selected, you can amend it and then tick that part. Now coming to the last example that I've taken, but a very important example, and I think most of us would have faced this in the earlier years of the GST era, that a sales return credit note is claimed as input tax credit. Say for example, in a particular month, I had a sale of 100 rupees. However, my sales returns, 100 rupees is the tax amount. And in that month, say my credit note amount was 180. So basically, my output was 100. However, sales return, that is the credit note, was 180. Therefore, 80 will have to be reflected as a negative figure. But since the portal doesn't accept the negative figures, lot of assessees have claimed this 80 rupees as input tax credit. Now, ideally, since it is not our purchases, we are not allowed to claim this input tax credit. We will have to compulsorily reverse it from the sale transaction. In case if your sale transactions are not sufficient to reverse this credit note, we will have to wait for a particular month where there are enough sale transactions so that this credit note of 80 rupees effect can be given. There is a recent judgment of OSS Cybernetics Private Limited of the Madras High Court, where a similar situation has been dealt with by the High Court and the matter has been remanded back to the officer. However, by reading the ruling, one can understand that it is a department is understanding that these are the issues which are revenue neutral and these are basically inadvertent errors which are claimed done by the assessee in the earlier years. But now coming to 23-24, after 6 years of GST, it will become very difficult for us to prove this point. That was all as far as GST output is concerned. Now coming to GST input tax credit, the most important point of most of our audits. Let us see how do we reconcile the GST input tax credit with the GST portal. I'm sure of all of us by now would be doing this GST 3B versus 2B reconciliation on a month-on-month basis. However, we also do this same procedure on an overall annual basis while finalizing the books of accounts. Now, why is this done is, at times it may so happen that we may claim the credit which is more than 2B, or we may claim the credit which is ineligible. However, we have claimed it because it was reflecting as eligible in GST or 2B. Now, in such scenarios, it is important for us to reverse that credit in GST return and expense out that entire amount in our profit and loss account. So this step is important while finalizing books of accounts, which will help you in recording proper expenses on which ITC is not allowed. Now, by notification number 14/2022, which was rolled out in July 2022, there is ITC reverse and reclaim effect, which is to be given in GSTR 3B of every month. There is a lot of confusion when it comes to this reverse reclaim. There was also a reverse reclaim ledger, which is there on the portal, for which we had to report the opening balance up to 28th and 29th of February. A lot of entities are still not following this reverse reclaim rule. However, since we are regularly dealing with the department has a major focus on this reverse reclaim part. So the ones who are not following this, please follow this. Initially, it may sound to be a little confusing, but actually it is very simple. Your all other ITC as per GSTR 3B has to match with your GSTR 2B. So even if there are any invoices which are reflecting in GSTR 2B, for which you don't want to claim the credit because of two reasons, either it is a block credit or it is not a block credit, but all the conditions of section 16 are not yet fulfilled in order for you to eligible to claim that credit. In such a situation, both of those credits are to be reversed. There are two kinds of reversals which can be done in GSTR 3B, permanent reversal and temporary reversal. In case if you are doing a temporary reversal, you are in a way telling the department that we are not claiming this credit now. However, we will claim this credit in the upcoming GST 3B returns. So that temporary reversal which you do forms a part of your closing balance of the electronic reverse reclaim ledger. In future, whenever you will claim that credit, that amount will be reduced from the electronic reverse reclaim ledger. It is also important to note whether all the conditions of claiming ITC as per Section 16 are concerned. Majorly, these conditions come into play for the last few transactions for the year end around in the month of March. It may so happen that your entity has received the invoice. However, the goods or services may not yet be received. In such a situation, you are not allowed to claim the credit, even if the said credit is reflecting in your GSTR to be. This is a very important point which is to be taken care of. Again, if there is any block credit which is claimed as per Section 17(5), the same needs to be reversed and corresponding effects needs to be given. Reversal as per Section 17(2), read with Rule 4243. Now, basically, what does Section 17(2) say? If there is any credit which is used partially for business purpose and partially for personal purposes, or there is any credit which is used partially for taxable supplies and partially for exempt supplies, in such scenarios, the ITC which is relating to the personal use or ITC which is related to the exempt supplies needs to be reversed. Now, the manner of reversal is mentioned in Rule 42 and 43. Rule 42 deals with the reversal in terms of exempt sales and in terms of personal use. Rule 43 deals with reversal in case of capital goods. Basically, if you are claiming any ITC on any capital good, the life of that capital good is considered to be 5 years. However, if you sell any of that capital goods before the period of 5 years, ITC pertaining to the remaining period will have to be reversed. So this ITC reversal mechanism is mentioned in Rule 4243, which needs to be taken care of. Usually what happens is the taxable versus exempt ratio on a monthly basis may vary, whereas the taxable versus exempt ratio may be different when it comes to the overall annual compliance. So even if your clients are doing reversal under Rule 42 on a monthly basis in every GSTR 3B, still it is very important to do an overall reconciliation at the end of the year. Once your turnover figures are final, what is the taxable part and what is the exempt part? And then accordingly, this reversal can be reworked. And if there is any short reversal, the same can be reversed and effects can be given. Now, as I discussed while discussing the output part, that there is no GST which is to be paid on the free samples. However, there are some entities which are paying GST because they don't want to come in the purview of this ITC reversal. So in such scenarios, if the companies are levying GST on the free samples, ideally those transactions are to be reported in the B2C category by the said supplier. However, by mistake, they may report it in GSTR 1 B2B part. If they are reporting it in the B2B section, that transaction is going to reflect in our GSTR 2A. Also, that transaction is not going to become a part of the block credit because the portal doesn't know that this is a free supply. So accordingly, it is going to be credit eligible. However, at our end, it is very important to note that if there is any free sample which is received by a Stroma supplier, the corresponding credit is not to be claimed. In case if it is claimed, we need to reverse it and the entire amount needs to be expensed out. Very important point and the major focus of scrutiny proceedings. In case if the payment is not made within 180 days, the ITC that is claimed needs to be reversed along with interest. Then as and when the payment is made, the said ITC can be reclaimed. Here, it is very important to note that even if the credit period is more than 180 days, the GST law has got nothing to do with your credit period. You still have to make the payment within 180 days, or else you will have to reverse the credit and then reclaim it as and when you make the payment. At times, it so happens that because of the accountant's mistake in the entries, clients also capitalize the GST amount and also take the credit of the GST on the capital goods. It is very important to check these entries and see if the double effect is given. In case if it is given, either of the effects need to be reversed. Either you don't capitalize the GST part and claim the credit, or if you want to capitalize it and claim depreciation on the same, the credit claim on the said capital goods will have to be reversed. ITC on prepaid expenses. Now, why do we not have to claim ITC on prepaid expenses? The answer is very simple. One of the conditions of Section 16 is that the goods and services should be received in order for you to be eligible to claim the credit. Now, in case if the expenses are prepaid, meaning you have not received the goods or services, however, you have made the payment. Since the goods or services are not received, you cannot claim the credit. The credit can be claimed as and when all the conditions are fulfilled. At times, TDS and TCS credits are missed by a lot of people because it reflects in a separate part on the GSTR portal in the TDS TCS section. So on a frequent basis, you can check the TDS and TCS section of the GST portal. And if the credit that is reflecting in that section is correct, you can accept the transaction as it is. And that TDS or TCS credit will form a part of your cash ledger on the GST portal. That effect will also have to be given in the GST cash ledger as per your books of accounts in the duties and taxes. That was all about GST output and GST input. Coming to the general part, that is, if any of these points are not adhered to, that is the output or the input, then in such situation, the proper officer may scrutinize returns explanation for the discrepancies. These explanations can be sought in Form GSTR ASMT 10. In case if he is satisfied, well and good. In case if he is not, then he has the following five options available with him. He can do a department audit under Section 65, or a special audit under Section 66, or inspection, search and seizure can be done, the powers of which are given in Section 67 to him. Or after ASMT 10 and DRC 01A, show cause notice can be issued under Section 73 or Section 74 as the case may be. So it is very important to note that these points are adhered to by all the entities. Also, on finalization of accounts, ICAI has come out with a publication, that is Handbook on Finalization of Accounts. This handbook is issued in the year 2020. Though this handbook might not be updated with the recent amendments, however, there are a lot of pointers which are very importantly noted in this publication and can be referred to by all of you. Now coming to the most important and the most neglected area of GST, books of accounts closing. Still, there is a lot of confusion when it comes to passing GST closing entries in the books of accounts. Most of the data that we receive for finalizing audit, we find that the GST closing entries are either not passed or they are not closed properly and they are not matching with the GST portal. So I have given few examples, and I have given one example where I have noted down all the entries which are needed for passing the closing entries. So let's take this scenario. Let's say, for example, you are making a sale transaction. Sale transaction entry, very simple, debtor account to sale, and GST output and CGST output and SGST output ledgers are hit. 99,000 of tax liability is put, and this 99,000 will reflect in your duties and taxes. The next transaction will be, which is the most important point, you have to transfer this output liability to the liability ledger. There is a lot of confusion when it comes to passing it to liability ledger, because if this is not done, it will become difficult for you to pass the closing entries. So the moment sales for the entire month or the entire year are done, please transfer the output CGST and SGST to your CGST and SGST liability ledgers, which is point number 2. By doing this, your output ledger will be closed. However, 9,000 will be payable in the CGST liability ledger and the SGST liability ledger. Coming to the purchase part, if you are purchasing any goods or services, or you've received any services, then the entry that will be hit is purchase account debit, CGST, SGST account debit to creditors. Again, CGST, SGST input will form a part of your duties and taxes on the debit side. You will have to transfer this CGST, SGST amount to the electronic credit ledger, which reflects on the portal. Similarly, you can create a CGST credit ledger and an SGST credit ledger in Tally or in your books of accounts, whichever software you're maintaining. So basically, after passing these 4 entries, your duties and taxes is standing at a place where there is SGST liability ledger, 9,000 payable, GST credit ledger, 7,200 receivable each. So ideally, if I claim this 7,200 on the portal and show a liability of 9,000, 1,800 will have to be paid by way of cash ledger. So now coming to the subsequent entries, we will knock off these entries and pass a payable entry. That is 9,000 was payable, 7,200 was receivable. I knocked off all the entries. And finally, at the end of the month, there will only be one amount which will be lying in the closing balance, which is CGST or SGST payable 1800, 1800. This part is very important to match on a month-on-month basis the actual GST payable by the cash ledger and the actual GST payable in your books of accounts. Once this is done, when you actually file GST or 3B in the next month, you will make the payment. When you make the payment, you will knock off this CGST and SGST payable and you will pass it as payable account debit to bank. If these 6 entries are taken care of very well, then your GST closing entries will always match with your GST portal balances. So that's about it. And I think I have tried my best to cover all the important points for closing the books of accounts. You can reach out to me anytime at my email ID and mobile number, which I've given here. And thank you once again, WMEC and all the participants for a patient hearing. Thank you so much.
Ma'am, you are not audible, ma'am. Oh, ma'am, you are not audible.
I'm done. I'm done with my session. Rishu ma'am. Rishu ma'am, you're not audible. No.
Rishu ma'am, can you join again? Ma'am, Rishu ma'am, you are not audible. So Prachi ma'am is there. Prachi ma'am Prachi ma'am, may we request you for formal vote of thanks for forum ma'am?
Yes.
Not audible now? Okay.
Yeah.
Yeah.
Rishu ma'am, you're audible.
I'm audible? Yeah, great. So great. Thank you for so much. And the floor is open for questions. And I can see, many questions by, different participants and would want you to answer them for them.
Okay.
So first question has come from Trapati from Delhi. She has asked, what is the turnover limit for issuance of e-way bill or invoice?
So, sorry, can you come again with the name? What is her name?
Oh, I can see Trapati.
Trapati. Okay, hi Trapati. So, as far as e-way bill is concerned, there is no turnover limit. E-way bills have separate limits state-wise based on a particular transaction. For example, in Maharashtra, the e-way bill limit is 50,000. So, any transaction where the invoice amount is more than 50,000, you will have to raise an e-way bill. There is no turnover limit. As far as it comes to e-invoice, with effect from 1st of April, e-invoicing is mandatory for any entity whose turnover is more than 5 crore in any of the preceding financial years, beginning from the financial year 17-18. I hope I've answered your question.
Yeah, so I hope Trapati, it makes sense to you. So the next question is from Mumbai by Bhavesh Kohli, and he has asked, can you explain again under which 3 situations credit note will be issued?
Sure. I will just take you to that slide. Just a minute.
So we have lot of queries. So gratitude to all the participants for taking an active participation.
So basically, Bhavesh ji, I will just repeat it once again. GST credit note can be issued only in case of three situations. If the amount, taxable value or tax, either of them, आपने जो charge किया है उससे अगर आपने ज्यादा charge कर दिया है, then in that situation you can issue a credit note. If your goods that you have supplied, if they come back, basically sales return transaction, in that situation you can raise a sales return credit note. Or in a situation where your goods are found to be deficient, in that situation you can raise a credit note. Coming to the next part, that is the debit note. Debit notes can be raised only in one situation where the taxable value or the tax charged by you have charged on a lower side. For example, you had to create an invoice for 150 rupees, but you made an invoice only for 100 rupees. Then for the balance 50 rupees, you can make a separate debit note.
Yeah.
Right.
So the next question is from Chitra from Haridwar, and she has asked, what is the provisional input tax credit shown in the credit ledger and how can such input be utilized?
So, Chitra, you can connect with me offline also for this. Basically, provisional input tax credit is you have received that credit, but the portal may or may not be sure if that credit pertains to you. So, in such a situation, you may receive provisional input tax credit. You need to yourself check if that credit is eligible and is eligible to you or not. If yes, you are allowed to go to that window and claim that credit.
So the next question is from Nidhi Agarwal from Jangir, and her question is, what effect we should give in books of account if investigation done by DGGI and they have issued SCN for undisclosed turnover, and client have disclosed his undisclosed sale and paid tax interest through penalty through DRC 03.
So, sorry, can you come again with a name?
Nidhi Agarwal from Jangir.
Hi, Nidhi. Okay. Hi, Nidhi. So, as far as I understand your question, you have undisclosed turnover. So, basically, you would have not collected GST on that. And whatever GST, interest, late fee, penalty, etc., your client would have paid. He or she would have paid it from his own pocket. So, that entire output will become a expense for the client, and accordingly, effects will have to be given in the books of accounts.
So our next question is from Disha from Ulhasnagar, and she has asked, if reversal of ITC is not done for payment beyond 180 days within 30th November of next financial year, can it be reversed post that and be reclaimed? What about section 16 clause 4 in such case? If not, can we pay interest from date of invoice to the date of payment?
Okay. So, hi Disha. Basically, even if your transaction date is pertaining to the month of March, your 180 days are getting over before 30th of November. So, ideally, reversal after 30th of November is not going to help you. And you will have to pay interest in case if you do a later reversal later on. You can do it, but it is going to have interest repercussions as your reversal was done late. You will have to pay excess interest on that part.
Yeah. So, Priya from Mumbai, she has said, your presentation is excellent and she would want to see your GST presentation. So, committee members could answer how can she get an access to it. So our next participant is from London, Ruchi,
Wow.
and she has also praised you very well, Forum, for your great presentation. And you have taken up this complex topic and you managed to cover it in the depth and you have well done it. So she had conveyed her special thanks to you. And so the next one is
Thank
Sonia
you.
from Faridabad,
Okay.
who has asked, reconciliation of the books is done with 2B or with 2A.
So basically, when you are filing monthly 3B returns, you are going to reconcile it with GST at 2B. Why? Because your suppliers who have filed their GSTR once after 11th, say if for example they have filed it on the 13th of the month, that particular ITC, you are not allowed to claim it in that month since the return was filed after 11. You are allowed to claim it only in the next month. So if you match it with GSTR 2A, you may end up claiming that credit in that month as GSTR 2A is dynamic. It keeps on changing on a real-time basis. However, when it comes to GSTR 2B, it is static. The moment returns are filed on the 11th and 13th of the month, your GSTR 2B is generated on the 14th. So for the monthly returns, you have to compulsory make a GSTR 2B reconciliation with your books of accounts. Invoices which are additionally reflecting in 2A will automatically reflect in 2B of the next month, and that is when you can claim that credit.
All right, great. So then there's a question from Jinal Thakur from Ghatkopar, Mumbai. What if GST on import of good is not reflecting in 2B in a particular month due to technical issues of ICE gate or whatever, but I have bill of entry for the same and receipt?
Hi, Jinal. So basically, in such situations, even if your credit is not reflecting in your GSTR 2B, you can very well claim the credit. However, it is very important to note that this credit should not be claimed in all other ITC, because if we are facing such an issue currently, the said credit has to be claimed under the tab import. In case if you face a scrutiny proceeding for this, you can very well show your your bill of entry. Also, I recommend raising a GST portal grievance for the same, that so and so is my bill of entry and it is not reflecting in my 2A. So this bill of entry and your GST portal grievance will come to your rescue when you face scrutiny proceedings in this regard. However, you can very well claim that credit. There is no issue in that.
Yeah. So again, there is a long question from Disha again from Ullaspur, and there are multiple questions being asked from her. So forum, I would request you to give your email ID. Most probably she might be having, so she can
Sure.
connect with you then. Yeah.
Sure.
Okay.
Is
All
my
right.
screen
We have.
visible?
Yeah. Very much.
Yeah. So Disha, you can note my email ID and mobile number and you can get in touch with me. Not a problem.
Because she has multiple questions. She has
No problem.
written many questions here. Yeah, and we have many other questions also. So now I will go to Muskan Talreja from Ulhasnagar, and she has spoken about, shedding some light on GST on factory under construction.
Okay. So basically, this is a very wide topic. Covering it in
I
just 2
understand.
minutes
Yeah.
would be difficult. However, I would just request you to please go through section 17.5 before claiming any ITC for factory under construction. Yeah, that's all. And otherwise, we can connect offline because this is a very wide and a very subjective topic.
All right. So then it is Priya from Mumbai who has asked, in case of e-invoicing, whether for each e-invoice, e-way bill has to be generated? That is the question. Is it to be generated or not?
No. So again, I think this was the first question also, which is similar to this question.
All right.
E-invoice and e-way bill have got no connection. E-invoice is based on your turnovers of the earlier years. If your turnover is above 5 crore in any of the year beginning from 17-18, you have to generate e-invoice. Coming to e-way bill, you need to check the limits as per your particular state. Like I said, for Maharashtra state, the limit is 50,000. So if you are making any invoice above 50,000, you will have to generate an e-way bill. If that invoice is below 50,000, e-way bill is not needed, but e-invoice is surely needed if you are crossing the 5 crore limit.
Great. So we have 10 more queries. I can see 10 more queries. So backend team, do we have time for that? Forum, do we have time to address that? Would you want to?
I think I am okay with it. If the committee is okay, I wouldn't mind.
Okay, so I will go ahead and share the questions with you.
Yeah, we
Sure.
can.
Yeah. All right. Okay, great. Yeah. So where were I? Okay. So Priya is done. Then there is Muskan from Ullaspur who has spoken about, share your opinion on GST impact on import of service.
Okay. So, hi Mushtang. Basically, import of service is you have to pay RCM on that. Again, place of supply rules need to be checked, and based on that, RCM liability can be determined for import of services. I am
Great.
trying to giving detailed answer as much as possible, but in some situations, giving details, a very detailed answer is not possible. So please pardon me for that. We can connect offline.
So you can be brief wherever required because we
Yeah.
have so many other people waiting to hear their replies as well. So
Yeah.
we have Chavi from Charki Dadri, and she has asked, can composition scheme be took up by supplier of both goods and services? If yes, what will be the threshold limit for them?
Okay. So, Chavi, yes, composition scheme can be taken by both goods supplier and service supplier. However, it is very important to note that even the composition scheme has separate rates. For goods, for services, the rates may differ. So you need to check which rate is applicable to you. And the limits are going to be remain same. Whatever are the current limits for goods and services, they are going to remain same even if your supplier is into both goods as well as services.
All right, so there is Karuna from Hyderabad, and her question is, ma'am, if I have raised a performa bill for consulting in January 2024, the client has entered it as tax invoice on 31/3/2014 and has deducted TDS on 31/3/2024, but has paid the GST to me in May 2024. In the meantime, I have filed GST1, GST3B without showing these performa invoice. Can I show the tax invoice in April 2024?
So I have very well understood your question. In this case, it is very important to understand what was the time of supply in your case. If the time of supply was in the month of Jan or in the month of March, but you have raised a proforma invoice just because you are waiting for the client to make you the payment and then you pay the GST, then that is not correct. If your time of supply was in the month of Jan, you had to show this invoice in the month of Jan in GST returns. Now the client has any which way deducted your TDS in the month of March. But in such situation, even if your time of supply falls after March, it is very well okay to show it in the month of April and May. But if your time of supply falls before March, you will have to show those invoices in the month of April and May. However, the date of the transaction has to be reported based on the time of supply, which is Jan, and you will have to pay tax along with interest liability from Jan to May.
All right. So the next question is from Swati from Gujarat. While calculating common ITC for ITC reversal under the Rule 42, do we need to take into the account the ITC already reversed in monthly GST return?
Of course. So basically, as far as I understand, say for example, your total common ITC is 100 rupees, but you are saying that you have already reversed ITC in the month of April, say for example, 10 rupees, in the month of May, say for example, 5 rupees. So 15 rupees of ITC is already reversed. Now at the end of the year, when you will do the common ITC calculation, at that time you will calculate your ITC reversal on the entire 100 rupees again based on your taxable and exempt ratio and see what was the amount to be reversed. If the amount to be reversed was say 20 and you have reversed 15, remaining 5 can be reversed. So common ITC will have to be calculated on a yearly basis once again, and the entire calculation will have to be redone on a yearly basis.
So Swati has another question in which she has asked, can we issue credit note now for supplies already made in previous year?
Yes, of course you can. There is no problem in that. But it is important to note that the credit note that you are raising has to be for the 3 transactions which are mentioned in section 34. If it is beyond that, you cannot raise credit note ever, now or later.
So Disha, thank you so much for so many questions. I can see so many questions coming from you. You can connect separately with Forum. She has given her email ID. I will skip these questions and I'll move to Mugda from Helency. And Mugda has really praised you, Forum, for your excellent presentation and the way you explained it.
Thank you,
And
Mugdha.
then there is a question from Ashwini from Pune. And his question is, is there any concessional rate of GST for construction of building for educational institute?
I think I will have to figure this out, but as far as my knowledge goes, there is no such concessional rate given. However, I will have to check this and I will revert to you offline. Just request you to drop a query over my email. I will check and get back to you.
Okay, so now it is our last question from Vidhi from Kalyan, and she has written, please guide on GST input on construction of property, which is to be subsequently given on rent after construction. Can we claim input tax credit against GST on rent payable?
Again, Vidhi, this is a very subjective answer and a very detailed answer will have to be given after looking at the nuances of the case. So not the correct forum and the correct time to answer this. Other details will have to be checked.
Yeah. So we are done with the questions, and yeah, so special thanks to our participant for being so active. You know, we got so many questions, so we are overwhelmed with it. Yeah. Special thanks to our speaker, Padan Shri and CA Forum for actively giving us the knowledge sharing on these important topics. So, and a special note of appreciation goes to our chairperson Preeti Savla and vice chairperson CA Kamisha Soni. And yeah, so the purpose of this seminar in the series is to foster knowledge amongst, you know, all women CAs. And we want all of you to take an active part in it and participate in it. And this program is led by all CA chartered accountant women. And let us, you know, go together, and you know, we will be having our next series on Wednesday. See you then. Yeah. So thank you so much, everybody. And you know, not the least, I want to really convey my thanks to the organizing committee, the backend team, the IT team, which is like, you know, आवाज नहीं आ रही है, आवाज कैसे ठीक करें, background कैसे ठीक करें. So special thanks to you guys. Have a great day, all of you.
Thank you so much.
And participant can reach forum on her email ID for their queries. Yeah. All right, we can close the session. Thank you.